Hi, everyone. I'm Wayne Fai. I'm the Group CEO of Triller Group. We were very lucky to present with an opportunity to acquire Triller in April. The merger process took a long time, took 6 months. We were very lucky to present with an opportunity to acquire Triller in April. The merger process took a long time, took 6 months, and we did not complete our acquisitions or mergers until the middle of October. It has been about 6-7 weeks since we merged. We have accomplished a lot. This is once in a lifetime opportunity. We're going to use the disruptive technology embedded already in Triller for the last couple of years to create the best social platform ecosystems for creator economy. And we're going to create what we call an everything ecosystems. We want to make sure we offer social media, social commerce, and financial technology for all of our stakeholders, from the fans, creator, advertiser, merchandisers, and the service provider. Not known to people outside Triller. We actually have almost all of the components inside the group today. A lot of people ask us, how do we actually create shareholder value? If you look at the basics business component of all of our 4, 5, 6 different subsidiaries, all of them share 3 components identical. Number one, all of our business are highly scalable. We are in the business of scaling up. That is our expertise. You're going to see us scaling this up exponentially in the coming months. Number 2, all of our business enjoy being in high growth industry, high growth market. And number 3, all of our business enjoy high market valuation multiple. Combine the 3, combine all the synergy among the business component that we have, combine all the technology, all the innovations that we have today, we believe we have a massive opportunity to create shareholder value going forward. And I'm going to hand over to Mark Carback. He's going to give you a bit more explanation, a bit more update about the work we have done in the last 6-7 weeks since we closed the merger.
Thank you, Wing Fai, for the introduction. My name is Mark Carback. I am Triller's CFO, and I wanted to spend some more time going over details on our overall strategy, where we're going to go with the company, and plans we have for the different business units. For our overall growth strategy, there are 3 very important pieces for the company. The first is people. For any great team, you need people. And as Wing Fai mentioned, Triller has a deep bench of people, talent, operators who've been in the business for a long time. Everybody is energized with the new corporate strategy with our new partners, and we're in a great position to unlock growth and enthusiasm across the board. The second piece is capital, and I think one of the important points from the merger is we have access to capital both from our long-term shareholders, from our long-term strategic shareholders, as well as access to new capital given our corporate strategy, our change from governance to board to overall management. We have a opportunity to put our best foot forward. And from a capital market standpoint, this is going to enable us to access markets and raise capital in ways that Triller wasn't able to in the past. The third piece is products. And as Wing Fai mentioned, all of our businesses have assets and people and software that have been used over the years in ways that are kind of siloed in a sense. Now, with the company's overall strategy and with Sean Kim coming on board, we are taking the opportunity to integrate a lot of our different products and businesses in one consumer-facing asset. And with the capital and with the people, we're able to upgrade the existing software and put us in a position over time to perform and carry out acquisitions that are going to help us both tuck in and potentially transformational to help our overall business strategy and grow our core software business. Talking about funding, so the first point to raise here is we are in the final stages of closing a friends and family equity round. So what that means is it's a limited equity financing round with key strategic holders and partners, which we expect to close in the coming weeks. And then following that, most likely in the first quarter or second quarter of next year, we are in a position, and we've been working hard with our banks to be ready to access the public capital markets. Given that we have completed the actual merger, we have all of our filings up to date. We will continue to, from an SEC filing standpoint, file as a group. And the next step really for us is to go out and showcase the company to the broader public and allow people to participate in the equity upside as we grow. And again, that's something we expect in kind of Q1 of next year. All of those things really are working towards a common goal, which is to enhance shareholder value. And that's something that is very important to all of us. We've had a long journey and at times difficult. And I think we're in a very good position now, given the company's focus, given the new strategic direction to grow shareholder value and really capture the opportunities out there that we see in the overall market. As we start on our journey post-merger with our new partners, there's a couple pieces to our overall strategy and kind of DNA that we think it's very important and key to focus on and execute. First and foremost is corporate governance. As a NASDAQ listed company with expectations from all of our shareholders that include standards for corporate governance, for disclosure, this is first and foremost our top priority, and that extends from the board to overall management. Now, since the merger's been completed only a few months ago, we have started down that road of putting in place processes, frameworks to make sure that we follow the best overall practices from a corporate governance standpoint. The second is legal disputes. We have a fair amount of ongoing litigation, which has been with the company for a few years now. It is a top priority for everybody to resolve those. We want to make sure that the overhang is gone and that from a company standpoint and from a stakeholder standpoint, we can move forward without the overall distraction from a commitment, from a time standpoint, and also money to be able to focus on our core business. And from a core business standpoint, the operating efficiency is important here. And I think we will talk in more detail about the plans, but in sum, I think our goal is to integrate some of the legacy businesses like Amplify, Julius into the app and to basically capture efficiencies from a cost standpoint, both overheads and shared services, but also revenue. And as we look at our business to see the opportunities from a sales standpoint to cross-sell and to bring the most for consumers, customers that we can. Underlying all that is financial discipline. We are at this point getting ready for SOX compliance. We know this is something that's on the horizon as a public company. We are dovetailing all of the corporate governance into financial discipline to make sure that we are fully integrated from a financial reporting standpoint. And investor engagement is very important for us. We are talking to you for the first time now. We are acutely aware that we have a large, disparate shareholder base who's been loyal and with Triller for some years. We also have the AGBA shareholder base And we are committed to communicating, making our overall strategy clear to everybody, and making sure that people know how to contact us and set a schedule of outreach in a measured way so that people know and they can expect what to hear from us when. And the last piece is employee incentives. And that is key for us. As we talked about in the beginning, we have a very deep bench of people who've been with the company for a long time. We have some new people who've joined. We're going to continue to add. And a key piece to that overall strategy is making sure that all the employees are incentivized for long-term growth. And we're setting that up as we speak to make sure that's in place. Thank you very much for your time, and we look forward to talking to you in more detail in the coming weeks and months.